Once again, welcome back. As you've come to expect by now, you already can see that there's a pattern emerging as we discuss these weekly videos. And that pattern is that we always start out with the US dollar. We go extensively into the course, in our course of why is this the reason and why the US dollar is basically the king of all currencies. That said, I want to sort of go into five important developments in the fundamental world, which will have an impact. They had an impact last week, and they're going to roll into further developments next week. So the first up is Chinese data. Now, Chinese and the Chinese yuan is not necessarily a currency that we are usually trading, but they have a very specific impact on how the world economy works, and investors, market participants, and large hedge funds, market makers are always keeping an eye on China and Chinese data in order to gauge where the world economy is going, in order to gauge trade figures and basically anticipate a downward or upward trajectory of growth. So one key development is that the US and China now are closing in on a trade deal. Now this should be good for the dollar as well as for the Chinese currency, which is why again trading it against each other is not a good idea. That said, Chinese exports as well as CPI figures will be out next week. Now this will alone impact the Chinese currency, but at the same time it'll impact the biggest trade partner, which is Australia in this case. So if we look through Australian pairs, you look through the Aussie dollar, US dollar, and all of these, will not make sense to trade it just yet because we are still very much in this limbo zone. As you can see on the weekly, we are ranging, on the daily, we are ranging technically. But there's one very specific trade that we talked about last week or the week before, and never actually developed to what we are expecting. And this Chinese data, if it comes in bigger than expected or even better, depending on the market reaction, we could see the Australian dollar giving us what we're looking for, and that is the Australian dollar against the New Zealand dollar. Now we know that initially the New Zealand dollar was weakening, and we know the reason why due to the central bank. But at the same time, Australian dollar has maintained its sort of limbo state. So if it starts moving and we see some higher lows from this area, it's pretty clear by now, if you look technically, that we have clear support. We had two false breakouts, but we have clear support now and two massive weekly candles showing us that price is ready to rally and even reverse altogether. So really, that being said, on the weekly, what we can look for on the daily is we can already see some deceleration. Now we might not get that initial perfect higher low down to the 50 EMA, but any sort of higher low that ends up with rejection of the 38% Fibonacci or the 50% Fibonacci technically should be a good opportunity to go long on this one. So that's the 50, that's the 38. As I said, this will not be an ideal trade to get into. The momentum has already is there, so basically the train left the station. But judging by the price action, judging by how the basically how the deceleration is forming, we could see a higher low. And to go back to the fundamental side of things, that higher low could be based on a weak Australian dollar temporarily due to that Chinese data that we just talked about. So that's basically one trade that I'm going to look for, and one pair throughout next week, throughout this week, depending on when you're watching this video. So the next fundamental event is it's basically a 2-in-1. So it's the ECB policy meeting, and we already know that they're not looking to change or shift policy, as well as not giving any further guidance as to where policy is going. We just know that they went back on their rate hikes, went back on their hawkishness on raising rates. The euro suffered, but again, if we pair it up with the dollar, 112 level has been maintained as the support. We are yet to see a clear lower low based on that level to actually see market participants piling back into a possible downward scenario in which really probably the 110, 111 would be the next one to look for as a target or even as a possible support. But that said, what I'm more interested about is how we pair up this ECB policy meeting, which we're not expecting too much from it, but how do we pair it up with the emergency EU summit, which will be held to discuss Brexit? And again, this could make both the euro and both the pound heading for some type of roller coaster. So in this regard, instead of looking to the dollar, instead of looking for the pound dollar or the euro on its own, I'm looking at the euro pound. So again, on the daily here, you're looking at it, not much to take away from it. But if you jump up to the multiple time frame analysis thesis that we advocate 100%, you should always look for higher time frames when the lower ones are crowded. What you can see is we have this 85 level now. I don't even have a line at that 85, and for good reason. It's not really a support. It's not really something that we can consider as support, despite price being supported at that line. So even though it's not very visible, it could be the start of something. So first and foremost, depending on how this, if there's any shift in the ECB, even though the expectation is that there won't be, if there is, couple that with the emergency EU summit discussing Brexit and how will that unfold on the pound side. There's three short scenarios. One of them is 12th of April, no deal. The other one is try and work out a deal until 22nd of May and push the deadline up to there, or which was the newest one over the weekend, was that the UK gets a flexible 1 year, 12-month deadline throughout which they can exit whenever they want once a deal is reached. It was called Flexrit, I believe. It had a strange name. Despite that, what we can see here is that we do have some resistance at this point. So price could be in a deadlock between these two levels. But even if not, really a good idea would be to look for this 50 EMA on the weekly, wait for it to reject based on a lower high and based on 50% Fibonacci retracement. And if there is rejection from this area, even getting in at the 38, which is a good 170 pips below the 88 level, would still make for a good trade if we are able to go down to the 85, which seems to be support for now, or even for a lower low. And that's again what I will be looking for. Now the third scenario is really one that's again, it has to do with the dollar. It has to do with the next week's FOMC meeting minutes and core PC inflation number. Again, the core PC is what the Fed's looking at to decide rate hikes or rate cuts. It's been at 2%. It's been around 2%, 1.9, 1.8, 2.1. It's not something that we expect it to change. No one expects it to change too drastically because it just doesn't do so. It's not very volatile, that inflation number. But we already know as well that the Fed's not looking to raise rates in 2019. Expectation is not for them to keep that rhetoric and to not release anything new in those minutes. But again, there's no way to really know what will be said and whether whether market participants react or don't react, or in what way do they react. We can only anticipate what we can see on the chart and then go from there. So in this regard, there's a couple of things. A couple of pairs on the dollar that are worth mentioning. One of them is the US dollar, Canadian dollar. So this is something that we had in the in our watch list, I believe. Yeah, it was on our watch list on Thursday, or even on Friday morning, I believe. So great one-to-one trade. I'm in this trade now, holding it and possibly looking at a break and a higher high above the 134.50. Now, it's not a given that it will work out, but based on the NFP numbers from last Friday, if we keep that momentum throughout the Monday trading sessions, then we will see this pair go up to the highs, especially coupled with weak employment change from the Canadian economy. So this fueling of the rally, it's not just due to the dollar having a good NFP number, which was higher than they expected, but also a weakening employment change from the Canadians. So it's basically the best of both worlds. You have a currency that's strengthening, while at the same time you have one that's weakening. And this is really what we're looking for. So if you see this 137.50 go above and make a higher high, you could be looking at a scenario in which you could get in a bit, possibly on a long scenario. That said, moving further, our favorite New Zealand dollar US dollar returns for this week as well, and for clear reason. Again, technicals massively now showing us the downside, showing us the reversals. So any sort of lower highs that are going up to value, up to the 50% Fibonacci in comparison on the weekly and on the daily, will be a very good way to get into this trade. It might not happen, but if it does, we have to be there. Now again, on the euro side, let me just see if I finish with the dollar. Yeah, so two trades on the euro. These are more Canadian. These are more not based on the Canadian, based on the Japanese yen. That's the euro and the Canadian, both paired up with the Japanese yen. That's what I was meant to say. So one of them is this euro Japanese yen, purely technical. Again, we have that euro data, but other than that, it is a technical trade. Triangle, clear higher low, clear lower high, and now what we have is deceleration at the 50 EMA and a possible retest of that trend line. So if that's something that will confirm in the next couple of trading sessions and days, we will be looking at that for a short scenario as well. And then moving on to the Canadian yen. As you can see, very similar once again, lower highs, possible double top. And in this regard, as you can see, with the EMAs not really rejecting or supporting, we can slightly ignore them. But price action is forming clear lower highs as well as a possible double top. And mind you, I do like the euro against the yen better than this one, but this Canadian yen doesn't look too bad either. And that's really my watch list and what I'm going to be looking at throughout the week for possible entries and the fundamental developments as well. I hope you have a good trading week, and I shall see you in the next video. Cheers for now.